So this is
the HODL model.
The HODL model,
She's
or these are the charts that go along with the HODL model. So here is Bitcoin's supply shown. That's just the circulating supply. So the orange line that you can see, it's 19 million something coins that we have currently in circulation. And here I made the division between a liquid supply and liquid supply. So the orange part of this chart is actually the supply that's available for trade, whereas the illiquid supply, the blue part of the chart, is actually coins that hardly move. And so instead of instead of looking at the age of coins, what we do with illiquid and liquid supply is looking at the spending behavior of coins. So if someone spends less than 25% of their holdings, it's considered illiquid supply. Whereas if someone spends more than 25% of his holdings, he's considered a liquid person or a liquid entity, because he might sell Bitcoin at any moment in time, basically. And so this is very interesting because especially the orange part of this chart, so the liquid part, so the supply that's actually available for trade, you could see that if you think of price as a function of supply and demand, the orange part is actually the supply part of the function. And so it's obviously a proxy. It's an approximation. It's not a perfect indicator, but it gives it does a decent job, in my opinion, about what is the actual supply available for trade.
Yeah, and the interesting part of this is that the circulating supply, the liquid supply, is every 4 years it's reducing.
Yeah,
so that's going to start going horizontal-ish.
Yeah, so the circulating supply after every halving, the steepness of that curve will basically halve because the issuance halves every halving, and so that flattens out. We're already at 19 million, and we will only go to 21 million in the next 100 years. So, but the illiquid supply seems to be growing. And so where the idea of the HODL model is that the third halving kind of was an inflection point, because as you can see in this chart, the supply issuance outpaced illiquid supply growth until the third halving. But after the third halving, suddenly illiquid supply is growing faster, at a faster rate than new supply is entering Bitcoin in circulation. And that's kind of fascinating, because that means that Bitcoin is getting more scarce.
Yeah.
And that has only been happening for a relatively short amount of time. And we started out with a relatively high amount of, actually around that third halving is the highest amount of available supply, which so a very abundant Bitcoin, let's say. So, and we had the kind of disappointing, perhaps, bull market after that. But so if you think that, we had a lot of supply during that bull market, it makes sense that we didn't get to like extreme high prices. Whereas next halving, it looks quite a bit more bullish.
Definitely. Wow. That's a cool chart.
So here's the HODL model then. So what does the HODL model do? So it tries to kind of predict the growth rate of illiquid supply, and because we can map, Bitcoin's supply issuance schedule is known into the future, and so we can map the HODL model, or we can try to predict like what is liquid supply going to do, and the HODL model is a very conservative model in this case. And you can see also that illiquid supply is kind of like quite a bit above the model value there, and in the bottom chart. We look at the same thing, but we look at it in percentage terms. So how much supply how much supply is illiquid of the total supply in percentage terms, and so we can see that we start at 100%, because in the beginning of Bitcoin, nearly all supply was illiquid, and then kind of supply starts moving more and gets spent more, and then so it dropped. But at that third halving, we made a low there. So the HODL model makes a low, and illiquid supply made a low there, and we have been rising since. So that means that again the available supply for trade is shrinking. So Bitcoin is getting more scarce since that third halving. And this was the model that I also showed last time. And what I didn't show was this was the conservative HODL model. I also had an optimistic HODL model, which is the HODL model S.
Oh, wow. That's the S curve.
That's the S curve. Yeah. The HODL model S, which is a model that I actually have never shared yet.
Hold on. Where are we here?
2030, though.
2030.
Yeah.
Do we want everything like Bitcoin to become very illiquid, though, or do we want people spending it?
I mean, if you think of Bitcoin as a store of value, mainly, it makes sense that most of the supply is just stored, right? But there will be always a small part of the supply that's liquid, and that will be used for trade. But if you think, of all the money in the world, like most value is also stored either in real estate or bonds or like in all kinds of things, right? It's just sitting there. Whereas the money that's spent on an actual day-to-day basis is a lot less. So the HODL model S I have never shared. It's actually the first time that I show this model. The reason I didn't share it last time also was because it was kind of like too optimistic, and coming from a stock to flow model that was kind of like had a bit of like a negative impact on. I didn't want to. It's better to have a conservative model and be wrong to the upside than to have an optimistic model and be wrong to the downside. But even now with the HODL model S, we're actually still trading. Like the illiquid supply is still above the model value, even with the optimistic model that I had.
So by the end of the next cycle, that really could get crazy.
Yeah, if we keep track with this model, I don't know. I mean, we will have hyper-Bitcoinization within 2 cycles. I can also not believe it myself. That's why I didn't share this chart last time, and why But I think now we've been past a bit like the whole stock to flow model, and it's fine. And especially since we're still trading above it now, I feel like it's good to share this.
This is where it'll get really real with all other football clubs, where they'll be like, oh. This is why he did it.
Won't you be in the Premier League in 8 years?
No.
Championship, maybe?
No. I mean, I'm thinking, I'm looking about the middle of the next cycle. What's that? 2, 3, 4 years. I think it's by the time we hit the league, our treasury will start accelerating in price, and then we can probably build that 50,000 seat stadium in
Bedford.
Yeah. I mean, if this model is going to continue keeping up, you can hire some really good players.
Oh, this excites the fuck out of me.
Yeah.
But it's funny because, when you first see prices go up, you get really excited because you think about personal net wealth. But I'm beyond that now. All I think about is this football club. How do I get this football club up the leagues? And money is a function of this, like available funds to invest in players, the team, your facilities. I look at this and think, oh, we can do this.
Yeah. Yeah. I believe you can get to.
Did you come to a game? I can't remember.
I went to see the field.
Oh,
but
yeah.
there wasn't a game.
There wasn't a game one. We're going to get you over for a game at some point. This is the coolest chart in here. Mm-hmm. What does it make you think?
I don't know. I think I like the idea of spend and replace, and then you don't have as much liquid supply.
But you can still spend it. It doesn't matter what the.
But then it's liquid. Then at that point, if it's moving regularly, then it's become part of the liquid supply, presumably.
Yeah, but the value you've got is so much more that you don't need to spend that much of it.
Mm-hmm.
Yeah, if the dollar value increases, obviously you need to spend less Bitcoin.
Yeah,
so.
But I'd hope more and more people start spending and replacing as more and more people accept Bitcoin. So I guess that then increases the. I understand the point, but
but also more and more people will use it as a store of value. So that's and
both can be true, right?
Both can be true at the same time.
Both more can be spending, and
because if you're spending and replacing, it doesn't remove the store of value aspect of it, but you also are actually using this.
And if we're recruiting more Bitcoiners at an increasing rate, we can all be spending more.
Yeah.
By the way, in this model, so here the third halving serves as this inflection point where Bitcoin becomes more scarce. But what I don't show here, but I do think there will be a second inflection point, like because here it kind of all of Bitcoin supply will be liquid by, I don't know, 2035 or something. So it
supply shocks.
That is, but that obviously won't happen. You know, there will always be liquid supply.
You'll just need to zoom in more. That's the point. Is that
Yeah.
there will always be a gap.
Yeah, there will always be a gap, but it will. But I think that gap will stabilize at some point.
Yeah.
You know, it's the sooner the closer we get to like hyper Bitcoinization. So there will be a second inflection point where because here the available supply will kind of shrink to zero. You know, like, but that's obviously not going to happen. So there will be some second inflection point where and that likely will be more close to hyper Bitcoinization, where we will stabilize in terms of liquid supply.
Love this chart.
Can I just ask one more question on that? Because I can't quite figure this out in my head. If we move to a world where everyone's getting paid in Bitcoin and spending Bitcoin, everything becomes much more liquid, presumably. Because coins are like moving hands, even though there's not like a US dollar trade or a great like a pound trade, like the Bitcoin is swapping hands more.
Yeah, I think that's why I think there will be a second inflection, but it might be Satoshis, that are kind of like swapped. So it depends on Bitcoin's price. So the higher Bitcoin's price gets in US dollar terms, the less Bitcoin needs to be moved.
But the more of like the global economy that goes to being paid in Bitcoin, then like I think that could probably outstrip the sort of the shrinking.
So
of the
if price does a 10x and you start moving, like if price does 10x or so, like then also the supply that you trade would be 10 times less, in dollars terms. So
but at the
moment,
Bitcoin
can grow a lot in terms if the user base grows times 10, but the price also goes times 10. Like then
I don't know
you
if
have
it's
the same amount of kind of liquid supply trading.
But I don't know if it's just the growth of the user base, because like the vast majority of the user base, like 99.9%, I would guess, are not getting paid in Bitcoin. And so if like the way that people interact with Bitcoin changes, I guess that could change that ratio as well. Because if everyone if say that 0.1% of people get paid in Bitcoin now becomes 10%, then that can, like, the 10x in price can get outstripped by that.
Yeah, I also think, by the time that nearly the whole world gets paid in Bitcoin, we're not going to measure in USD terms anymore. Like it's not going to be a value, but we can still look on chain, like how much supply is going to be used for, like how much supply is going to be liquid and how much illiquid. That percentage we can still see in it. But I think, and I cannot predict that now. But I do think, there will be a second inflection point
where it starts going the other way,
where we again maybe start increasing or at least stabilize in terms of available supply for trade. So this is it's again zoomed in on that orange part, which is the available supply for trade. But here we look at it at percentage terms. So how much percent of the supply is available for trade? And we can see that in the first halving we had around 20% of the supply was available for trade, and we had these huge price increases that came with that. Then we had in the second halving we had 25% of the supply available for trade. And we still had we did 20x or so in 2017. And then the third halving, so that was actually the inflection point, we had the highest amount of available supply for trade, which you can see like quite clearly in this chart. And since then we have been going down.
So we've just lived through what should be the hardest cycle.
Actually, I do think so. Yeah. If you look at Bitcoin scarcity, that is the case. Like obviously it also depends on all events and how much demand there is, and so there's other factors at play. But in terms of Bitcoin scarcity, the highest amount of available supply was available around that third halving. So
and so then it kind of makes sense that we didn't really have a 10x cycle that a lot of people expected. They expected it based on previous cycles, but they weren't looking at this data. And for us to have such a huge, jump from, I mean, well, we kind of did what the bottom was 3K, we topped at 60. So that's really a 20x actually. But I think, there's some people thought we were going to go to 100, 150, 200, maybe even 300 because they were basing it based on the growth of a previous cycle. But with a massive increase in the supply available for trade, that made it a lot harder.
Yeah, I usually measure from the previous all-time high. So in that sense, the all-time high, the previous all-time high was like 20K, and so this cycle we only got to 69K. So it was like a 3 point something x. Whereas in the 2017 we had the 20x. We went from 1200,
nearly about 18,
to something like that. But if next cycle, and it looks like it, I mean, that we're going to have a supply that's available supply for trade that's going to be more similar to the 2017 cycle.
So another 18x.
So I mean,
hold on, that would be on 60K. No, come on, that'd be a million.
Yeah, that would be. Yeah.
So shit. What was my bet with
title?
What was? Yeah. Root says we definitely hit a million next cycle.
He promises.
He promised us. What was my bet with American HODL?
I think it was it $1 million by 2027?
I think it was. And he could win that.
You might lose, yeah.
I mean, I fucking hope you lose that bet.
Oh, I hope I lose that bet. I've never wanted to lose a bet more than that one.
Yeah.
Colin, do you understand why we want me to lose that bet?
Yeah. Yeah. So, it is truly amazing. I think this is really the most underrated data. That's and I think that's kind of even that adds to the fact that it can happen like more likely because no one is expecting it. Everyone is expecting diminishing returns, next cycle, just because everyone is focused on this locked growth base. Also, all history of Bitcoin has been diminishing returns. If you look at price, you will only think diminishing returns. But if you think of price as a function of supply and demand, now the supply is really getting more scarce. And it seems to be, I mean, I made a conservative model, which I shared 8 months ago. I actually made the optimistic model before the conservative model, but I found it too optimistic to share. So I tried to make a more conservative model, which I shared 8 months ago. But now I feel like since we're still trading above it, I also have to share the optimistic model. But even the optimistic model is not optimistic enough, apparently. So it's at that fast pace it's going, and the optimistic model is kind of like by 2030, which I also cannot believe. So like I don't know, but the data is the data. I mean, obviously also demand is a function, but we showed that with the short-term holder supply, which I think is a pretty good function for demand. So you have these peaks coming in. So, but if the supply is kind of scarce around the next halving, and we get one of those spikes again in hype, like in short-term holder, a lot of new young coins coming in, which I do expect at some point. Price could go quite insane.